This is the 7 days ahead multi-asset market update for 16th of September 2016, written by Mark Sturdy, technical analysis by Mark Sturdy, and fundamental analysis by John Lewis. This week's update is concerned with the S&P, the US economy, and the influence of Donald Trump. Turning first to the charts, the monthly S&P chart demonstrates or illustrates a fairly perfectly constructed bull parallel flag formation, continuation pattern. The market's reversals here, and here describe the flag. These two diagonals are parallel. The market broke out of the flag in June and pushed ahead above the prior high, has drifted a bit. We consider this to be a very, very powerful pattern, set to drive the market a great deal higher. Only if the market were to break back through the upper diagonal of the flag, currently around 2070, would the bulls capitulate. This is extremely bullish long-term chart. Turning to the weekly chart in the December 2016 S&P futures, we have a well-constructed double bottom or complex double-headed head and shoulders continuation pattern. Here's the shoulder, head, shoulder, or just a double bottom. Either way, the market is set to go a good deal higher. We think at least as far as 2400, measuring from there to there and extending it beyond the neckline. 2400 is the minimum move of this. The market has drifted, and there is good support from all these prior highs, 2133, 2110. That is an area of support that the market should find very difficult to break down through. Only a break and close beneath 2110 would convince the bears that they had any prospect of on the downside. And going then lastly to the day chart, we have here the pullback from the period of stability throughout August, the abrupt pullback to the very first and most obvious levels of support from these prior highs, 2089 and 2101, a band of support beneath the market. We think that is very good support. So there is good support in the day chart, there's good support in the weekly charts from these levels, and indeed there is the massive underlying context of a big bull parallel flag driving the market, which has completed in the monthly chart. Altogether, chart-wise, very, very bullish. But then we have the fundamental analysis. My colleague John has gone through the optimism of Yellen and her policymakers, thinking that the US economy was bouncing back and strong enough to digest a second rate hike. Then the recent last week retail sales numbers much weaker, making a Fed rate hike at next week's FOMC meeting look highly unlikely. And if it isn't done, then would the Fed hike later? Probably not, due to the proximity of the presidential election. However, we think the prospect of a Trump presidency is starting to impact the markets. Why would it be a worry for stocks? Principally because his economic policy has raised questions over the continuance of America's free trade stance. In summary, from the fundamental point of view, the Fed may very well leave policy on hold until early next year, but the final months of the presidential campaign could become a more important dynamic in this market, causing a degree of angst amongst traders and weighing on the market. So we think technically the market is very well set and underpinned. It may yet not perform on the upside as we might expect because of the influence of the possibility of a Trump presidency.